Hey guys, welcome to a real quick video that I'm going to be doing. It's more of an education video on position sizing. And I think this is a topic that a lot of people fail to put a whole lot of thought into. So I figured that it would probably be worthwhile to go through this. But of course, before I get started, I'm not your financial advisor, and this is just mainly intended for educational purposes only. I'll be talking a little bit about trends and things like that, but I want to put a focus on position sizing because I think a lot of people make mistakes when they're creating positions. So I'm going to talk about some of these things and kind of go through some different strategies when you are taking a trade. Okay, so I'm going to take a look at the Ripple chart because I'm somewhat familiar with the Ripple chart here recently. And when you take a trade, let's say you have a $500 account. Okay, so you have a $500 account, and you want to take a trade. You are itching to make some money. Everybody is itching to make some money, and so you're looking at all of your different options out there because especially in the cryptocurrency world, you have hundreds and hundreds and thousands of different choices available to you. And then, of course, in traditional stocks, you've got lots of choices there as well. I'm a big proponent of waiting until the time is right before you take a trade. I think it's very important for you to wait until the time is right before you take a trade. And I talk about that kind of stuff in some of my other videos. I'm not going to cover it here. I'm focused on your position sizes. Once you have a trade that works for you, I never ever suggest putting all of your equity into a single trade. That is the most reckless way to trade and the biggest mistake that a lot of people make. So, rule number one is do not go all in on a trade. Okay, so we're going to put this up here. So we have rules. Rule number one, never go all in. That is a perfect way to lose money. Because just because one trade looks good at this exact moment does not mean that there will never be another trade in the next hour, 2 hours, that are going to look good as well. And as far as position sizing goes, you should be putting in a specific percentage for a starter. So if you have a $500 account and you want to put in some equity into a trade, you should be looking at a percentage of your equity. So let's say you want to put 10% in this trade. Maybe you are experienced enough that you can manage 10 trades. Putting 10% in a trade would allow you to have 10 different positions. Maybe you want to put 20% in a trade. Once you get past 20 or 25%, it's becoming an area where it's going to be harder for you to manage all of your trades. So I would recommend not going greater than 20 or 25%. Again, this is a beginner sort of tutorial here. So, aim for somewhere between 10 and 20%, ideally. So you're looking for 10 to 20% of equity in your trade. Of course, there are other rules when it comes to managing your trade, but we're specifically talking about position sizing. So I'm not going to talk about stop losses. I'm not going to talk about taking profit. What I'm going to be talking about is managing your position size. So let's just say I buy Ripple, and I buy Ripple. Let's say I buy right here. Let's say I'm lucky, I get Ripple right at the bottom. All right, and so Ripple then goes up 21%. All right, so if I have a $500 account and I put 10% in, I put $50 in that account, or sorry, in that trade. So $50 and add 20% onto that, I now have $60. Okay, so I went from $50 down here to $60 up here, and let's say I sell Ripple up here for $60. All right, so I made $10. All right, $10 on a $500 account, That's pretty significant. I made 21% of my 10% equity that I put into the trade. So now I have $60 instead of $50. What I'm saying here is you're managing Ripple on $50, not on $500. Okay? This trade starts to go really good for you, and let's say you sell on a 20% increase. When this price comes back down here, you're going to be looking for another push up. Okay, so you've got a nice move up here. Now, this is where a lot of people get it wrong. And this is what is very important that you understand. So right down here, the price was 18.5 cents. Okay, so you have $50 times 18.5 cents. Okay, so we have 18.5 cents, $50 times 50. All right, so you've got, let's say that you have, I'm not getting the math right here at the moment, but let's say you have, 500 shares of Ripple that you bought, 500 shares of Ripple that you sold up here. You made that $10. When you come back down here, I don't recommend buying 550 shares. I don't recommend buying 600 shares based on the increase that you made. When you buy back in, keep the $10 off to the side, bank that $10 and do nothing with it. You're still going to buy $50 worth of Ripple on the pullback. When the price goes up, you're going to sell a 27% increase on your new $50. So 50 times 27.35% is now $63.67. All right, so you made $10 on this trade. When it pulled back, still put in the $50. Don't put in the $60. When this price goes up, all right, so now you've took that new $50, turn it into $63. When this sucker pulls back, you're going to put $50 in here, and you're going to wait for this thing to finally get to the point where it's going to roll over again. So now you made $10, you made $13, and now you're looking to make, off this new $50 trade here, you're looking to put in 34% profit on top of that. So 50 times 34.71. So now you made $17. So first you made $10, then you made $13, then you made $17. So right there, you are compounding those gains. So you're looking at $10, $23, $30, $40. You have $50 you were playing with, and you've almost doubled it. You've almost doubled that, okay? But you're putting the cash on the side. Your position size in Ripple is always going to be $50 upon entry, and you have already almost doubled that. Again, we're not talking about stop losses. We're not talking about managing trades. And this is obviously in a perfect world. You're never going to catch the bottom. You're never going to catch the top. But you're going to risk 10 to 20% of your equity. And we're assuming, again, we're assuming a $500 account. So you are going to put in $50 at a time. And you are going to manage your risk, manage your trade however you would like, but when you cash out and you get back in, you're going to put in that same amount that you put in before. And then you're going to take the trade and you're going to make profit. And when it comes back down here, don't put in $67, put in $50 and save that extra cash for another trade, for another asset. So what we've done here, we've taken $50 and we've turned it into $90, but now, since I'm only putting in $50 at a time, I now have $40. I can use it for something else. I can use that $40 for something else. And let's just say for a moment that I haven't put that money in somewhere else and I buy here and then I'm going to sell up here. $50 times 27%. $50 times 27% is $13.50. So what we have $13.50 on this last trade. And then on this trade, we had $17. I'm just rounding here. On this trade, we had $13. And then on this trade, we had $10. Now we have $53.50. We still have our $50 that we could buy back in on Ripple, but now we have $53 we can put in on something else. Or you can just cash that out because you just made back your original investment and you are playing with house money at this point. So really, honestly, if you took the trades the way, managing your positions this way, and of course, buying the bottom, selling the top, it's not realistic, but let's just say in a perfect world that you did. This is what you do in physics. You talk about it in a perfect physics world where there's no gravity, but you have these things that you have to worry about. Buying and selling, reinvesting only what your original investment was. Take your profit and set it aside, and at this point, you cash out your $53.50, and now literally Ripple could go to zero and you still win. Now, obviously, that's not what you want to have happen, but you made back your original investment, you made back a little bit on top of that, and hopefully this cycle repeats itself. Hopefully you are able to just continue to repeat this cycle and you are able to repeat this again, and every time you do it, you're increasing your equity, you're increasing your profits. That's the main point that I wanted to cover. And if you're not comfortable talking about this in terms of $50 positions, think of it in terms of I bought 1,000 Ripple, and then up here I sold 1,000 Ripple. When it comes down, you buy 1,000 Ripple. Up here, you sell 1,000 Ripple. If that's easier for you, oh, that's even easier. Okay, you buy 1,000, you sell 1,000. When it comes down, you buy 1,000, you sell 1,000. When it comes down, you buy 1,000, you sell 1,000. You can see the trend here. You're buying a fixed number, and every time you buy on a pullback, you are banking that cash automatically without even thinking about it. So don't do any complex math. If that's not your thing, you buy 5 shares, you sell 5 shares. You buy 5 shares, you sell 5 shares. You are naturally going to be increasing your US dollar account because that's what you're doing here. You're increasing how many US dollars you have. You buy a set amount here, you sell everything here. When it pulls back, you buy that same set amount. Don't buy 100% of your equity. That is bad. Don't do that. So you buy 1,000 shares here, you sell 1,000 shares here for a 21% USD profit. When it comes back, you buy the same amount that you bought down here. You buy 1,000 shares here, you sell 1,000 shares here. You buy 1,000 shares here, you sell 1,000 shares here. And rule number 1, never go all in on a trade. That is a surefire way for you to be reckless and for you to lose money. Don't always go all in because at some point this trend is not going to repeat and this is going to roll. Again, we talk about managing trades on different videos. I'm not talking about that here, but I'm just saying that the trends are not always going to just continue moving in the upward direction. Eventually, it's going to start moving in the opposite direction. And if you continue to go all in on your trades, you're basically going to be sitting there with your fingers crossed, your legs crossed, your eyes crossed, waiting for this trade to go back in your favor, and then you're starting to lose money. And you're eventually going to get to the point where you are going to be losing everything that you made. This could very easily start working its way to the downside, and you lose 30% of your account, your whole account, because you went all in. Don't go all in. Don't go all in. And when you reinvest, only reinvest what you originally put in every time. Every time. Again, you buy 1,000 shares, you sell 1,000 shares. You buy 1,000 shares, you sell 1,000 shares. Repeat that cycle. All right, guys. That is the main lesson that I wanted to cover today. This is, one of many different ways to manage positions. But again, this is the easiest way to manage a position. especially for new people trading. It's a very, very easy way for you to manage things. If this video did help you in any way, shape, or form, like, subscribe, share, all that good stuff. And, I appreciate all the subscribes. And if you want to be part of our Discord community, it doesn't cost a dime to join in our community. Just throw in a comment here. I'll be more than happy to get an invite code out to you. We talk about trades, we talk about risk, we talk about all different kinds of things in that room. And we'd love to have you there. But wherever you are in the world, I hope you're having a good day, good night, good evening, and you're staying happy and healthy out there.